How are you, passive investors? I got a story here from ABC Business. First Guardian collapses, leaving thousands at risk of losing super as ASIC freezes director assets. And we've got a bit of an echo today, and I can't do much about it. I'm sorry about that. Now, let's read on. This story by Nassim Kadim and Mackenzie Colohan. And this is going to be a bit of a long-winded one, but there's not much I can skip over. I mean, I've just got to go through it here. There's a few takeaways from it, which I'll probably just stop and mention as we go. Juan Carlos Sanchez regrets the day he decided to reinvest his superannuation. Mid-23, the 41-year-old who runs a wholesale food family business in Melbourne was contacted by a financial advisory company called Venture Egg, which convinced him to roll his super savings from ANZ into a super fund called Austrac. They talked a big game, he tells ABC News. They were more like someone selling you cars, just relentless people. They were talking numbers like, we'll have you 800,000 in your super by the time you retire, or 1 million, really crazy things like that. So I'll stop it there. I mean, there's the first red flag. Your super's sitting there, it's doing what it's doing, it's been returning what it's returning for 20 bloody years. You know how to run a business, you know how to make money, but you don't really know how the financial system works or investing works. And someone comes along and promises you something too good to be true. I think this is something in our society now where we allow things to be, left to others. And further on in this article, they're going to talk about the government should step in. But we'll talk about that when we get there. The problem is that super is now compulsory. So it's just these, further on in this article, once again, these people are talking about this guy that's lost everything. He's going to say, well, he's saying, that I thought it was safe. If it's going to be compulsory, how come it's not safe? Well, that's the reason it's not safe, is because it is compulsory. It's just a great big funnel of money, and it takes, they mentioned, so long to get your super license to be able to manage this money. It's so hard to get the license. But by golly, once you get it, you've got this flow of funds that never stops, that has to be paid every week by the employers. Anyway, after reinvesting his entire superannuation savings, Mr. Sanchez was checking on the progress of his super fund. He noticed that withdrawals had been frozen. This had been happening for months, but it wasn't until January he was informed that withdrawals from his super fund had been frozen since May 2024. When I got that email from Austrac advising the superannuation money had been frozen, my stomach dropped. I just had this sick feeling. Yeah, I'm sure you did, mate. It turns out the story he was sold by Venture Egg's slick financial advisors was too good to be true. So god damn, guys, if someone approaches you and says, like I got referred by a friend because I've got a self-managed super fund where I pick the stocks. But shit, I went and read bloody The Intelligent Investor by Ben Graham and a couple of other really good books by Chris Leithner. I've educated myself about investing before I ever, set up a self-managed super fund. And I knew that the people that are managing your super that you don't manage yourself, half of them they've got to be either, some of them are going to be crooks and some of them are just going to be incompetent. And this is your life that you're letting someone else muck around with. So I'll carry on. Savings channeled into First Guardian Master Fund. As Mr. Sanchez later learned, his super money wasn't being reinvested to diversify and grow his retirement savings. It was being channeled into a cash hub controlled by the directors of a managed investment scheme he had never heard of called First Guardian Master Fund. Venture Egg had convinced Mr. Sanchez to transfer his funds over to the Interprac Financial Planning, which was previously trading as Austrac, the Australian Financial Services Licence ASL holder. AFSL holders, sorry. While Interprac has since cut ties with Venture Egg, and there have been financial court orders freezing certain assets belonging to Venture Egg's then director, Ferris Merry, who was a VFL ruckman apparently. Mr. Sanchez says it was Venture Egg that convinced him to channel all his superannuation into First Guardian without disclosing to him where and how it was investing. Well, there's a red flag. Don't do it. You don't know where it's going, you don't know what's happening, don't bloody do it. Too late for 6,000 people, eh? He's among 6,000 Australians who invested $590 million with First Guardian, which collapsed earlier this year, which is currently under investigation by the corporate watchdog, the Australian Securities Commission. Investors were advised to roll their superannuation assets into a retail choice superannuation fund and then to invest part or all of their superannuation into First Guardian. They were advised, they didn't have to do it. Like you smell shit, walk away. First Guardian was available to investors on superannuation platforms hosted by equity trustees Netwealth and Diversa. And while this may have been written in the legal documents they signed, many of them say they had no idea that the funds would end up with First Guardian. What's the bet? These guys, after, thinking, this guy says, well, they were like car salesmen, they were pushy, then signed some electronic document or a paper document and didn't read it. How many of them read it? They skipped through it. Out of these 6,000 people that got hoodwinked into investing into this fucking sham, how many of them read the whole thing? I was one of them once, just, where do I sign, Now it's like, right, you give it to me, I'll have a fucking look at it for a few days, eh? I'll have a damn good read of it, and if I don't understand a few paragraphs, I'll fucking read it again, Because there's no hurry. This is your life. This is all your money. So you got to, people just don't have that individual responsibility, a lot of them these days. Like I said, they know how to run businesses, they know how to make money. And when it comes to this, they can have the wool pulled over their eyes real easy. You read every last bit of it. I learned that selling real estate, dealing with school teachers. No offence to school teachers, fantastic. They'd sit down and read every damn bit of that contract and they'd say, what does that mean there, Brendan? And I'd like, shit, I'll have to read the bloody terms, I don't know, But they read it all. Generally, some people will and some people won't. And if you're going to trust somebody and not read the document and just say, well, I trust this guy, so I'm going to sign it. Well, who is that person? Do you know them personally? Have you been lifelong friends with them? Have they, who do you trust when it comes to that stuff? People can't trust their own family, they can't trust their own brother, they can't trust anyone, when it comes to wills and all that sort of thing. Read it, Why do you think that you take it to a lawyer when you do a property transaction? I'll just get my lawyer to check the contract. And usually it's a formality. It's like, yep, we're happy with the terms, that's all good, go ahead. But that's why you pay the lawyer to do it. You've got, and if you're going to sign something so important, you've got to, or you're going to trust someone's say-so rather than reading and understand what's written there. If you read a document and you can't understand it, you don't have to sign that. Too late for 6,000 people. I'll carry on. The same thing happened with another now collapsed fund called Shield Master Fund. In that case, more than $480 million was invested by at least 5,800 Australians who accepted it primarily through invested in superannuation platforms, the trustees for which were Macquarie Investment Management and Equity Trustees Superannuation. That's quite a famous name there, Macquarie Investment Management. ASIC is now considering whether to take legal action against Macquarie and Equity Trustees for their role in the collapsed Shield and First Guardian managed investment schemes. It has said a decision will be made as soon as next month. As the regulator investigates the elaborate financial ties and liquidators work to repay creditors, thousands of hard-working families fear they will never see a cent of their superannuation. Falcon was First Guardian. Former director David Anderson doesn't want a trial by media, of course. Falcon was the responsible entity for the failed First Guardian Fund. It invested hundreds of millions of dollars in companies associated with former managing director David Anderson and paid $45 million to advisors and marketers to promote the fund, according to ASIC. Well, you're going to get these promoters out there when you've got this stream of dough coming off everybody's wages every week. It's got to go somewhere. The regulator is also investigating Mr. Anderson personally. He's alleged by ASIC to have poured tens of millions of investors' retirement savings into his own failed property developments, craft breweries, and to prop up the struggling restaurant empire of celebrity chef Scott Pickett, of which he was a shareholder. Well. The federal court has wound up and appointed liquidators to the fund's responsible entity, Falcon Capital, and Mr. Anderson's assets have been frozen and his passport seized as investigators sift through years of financial records of his complex web of companies. On Wednesday, the federal court made interim travel restraint orders against Mr. Anderson and another director, Simon Salamaj, who are now banned from leaving or attempting to leave Australia until February 27, 2026. Sorry if I pronounced your last name wrong there, Simon. Public court documents obtained by ABC News have revealed that Mr. Anderson moved $274 million into offshore companies tied to him shortly after he was alerted to the corporate watchdog's probe. ASIC investigators have said that the money will be difficult to recover. Between June 2020 and September 2024, ASIC also alleges that $5.6 million was deposited into Mr. Anderson's personal ANZ account without any legitimate basis for payments, in that amount being apparent to the ASIC or disclosed to investors. He allegedly used about $16,000 to make a mortgage payment on his multi-million-dollar Yarra riverfront home, according to court documents seen by ABC News. It's amazing, eh? These guys have got a fair bit of wealth behind them. There's no need to play any shenanigans, eh? But, allegedly, that's what he's doing. Anyway, ASIC alleges that Falcon and its directors and officers have failed to act in the best interest of members. And ASIC told the court, according to the documents seen by ABC News, Falcon appears to continue to redeploy the limited funds it has received to illiquid investments, despite representations made to investors that it would fulfill redemption requests and reopen the First Guardian Master Fund for investment once the cash receivables are received. ASIC also said that since the suspension of the applications and withdrawals in May 2024, Falcon may have misled investors about the security of their investment and likely returns. A number of the investments made by the First Guardian Master Fund appear to have been either entered into for improper purposes or managed inappropriately, the court documents noted. This included investments on terms that were not in the best interest of investors and which were infected by conflicts of interest. But the legal representatives acting for Mr. Anderson, Dan McKay of McKay Chapman Lawyers, said as yet there have been no findings or fact or law by any court or tribunal, nor by ASIC. And it carries on about he declined an interview, and the lawyer talk about, well, he hasn't really done anything, Yeah, Mr. McKay said that while the federal court proceedings had become matters of public record, they were merely allegations made by ASIC of concerns of a particular ASIC officer held at a particular point in time in the context of what is an ongoing and complex investigation by ASIC. They are no more. Further, the evidence put forward by ASIC in support of the federal court proceedings is untested, there having been no necessity for cross-examination of ASIC officers in the particular context of the federal court proceedings. Isn't that fantastic lawyer talk? Wish I could have, keep that up my sleeve. First Guardian investor funds allegedly loaned to offshore businesses. ASIC's tracing of financial records indicated that the First Guardian Fund received $590 million in investor funds, but the stated value of the fund assets by one of its directors was only $506 million. Therefore, ASIC investigators said that in the best case scenario, 81 million of investor funds were unaccounted for, but conceded the money loaned to overseas businesses may never be recovered. Letters to ASIC from furious investors shown in court reveal one investor stands to lose $677,000, while another was relying on their superannuation for urgent spinal surgery. Responsibility for most, if not all, of the concerns raised by ASIC regarding the mismanagement of the First Guardian Master Fund and the direction of the investor funds into illiquid and risky investments falls squarely with Mr. Anderson, ASIC said in the court. And they'd be right. In reference to the travel bans and asset freeze, the lawyer said that the court had power to make certain facilitative proceeding, protective orders in the context of an ongoing investigation by ASIC. Blah, 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 blah. For the lawyer, he noted that First Guardian sub-funds are being wound up. ASIC is also investigating Ferris Merry. He's investigating the Melbourne-based financial advisor who controlled Venture Egg Financial Services, pushed thousands of clients into the First Guardian Fund and the Shield Master Fund. Yep, he pushed them and they went. Don't go. Next time some slick guy rings up and says, I can get you better money, it's a Bernie Madoff. If you're getting a 5% return or better or something, and you don't want to manage it yourself and you don't really know what's going on out there, just leave it where it is. Don't go shifting that money around on their say-so. Fuck them. The federal court has made interim orders freezing certain assets of Mr. Merry, who was contacted by ABC News, and his lawyers said bugger off. Yeah. Oh yeah, according to ASIC, the former VFL ruckman is linked to at least 2,440 clients who invested $179 million in First Guardian funds. While advising clients to invest in First Guardian, Mr. Merry was also being paid to market the fund. Well, bugger me, eh? In court proceedings, it alleged that Mr. Merry received more than $19 million in payments from First Guardian for marketing services. How do we get one of these super licenses? I've got a real estate agent's license now. How do we get one of these super licenses, eh? My God, you don't have to be a crook. ASIC alleges the investment firm also handed over a further $21 million to Osama Saad's Atlas Marketing over just 9 months, and that it paid $5.7 million to Rashid Al-Ashaka's Indigo Group. The assets of Mr. Saad and Mr. Al-Ashakar have also been frozen by the federal court in connection with ASIC's investigations concerning First Guardian Master Fund and Shield Master Fund. ASIC alleges investors were expressly told by Falcon that financial advisors, including Mr. Merry, would not receive any fees from Falcon. Yeah, no fees at all, just a few million here and a few million there. Despite those assurances, Mr. Merry, Mr. Saad and Mr. Al-Shawqi have received tens of millions of dollars of payments from First Guardian Holdings via payments for marketing services made to companies controlled by them. ASIC has concerns that the payment of fees purportedly for marketing services provided by Mr. Merry, Mr. Saad and Mr. Al-Shawqi and their associated entities may have arisen from a conflict of interest and depleted investor funds. They may have. ASIC Deputy Chair Sarah Court told ABC News these were very complex and very high-risk investment schemes and were happening on an industrial scale. Yeah, this will be the tip of the iceberg, eh? This will be the tip of the iceberg. Mrs. Court said the regulator is now considering whether to take legal action against Macquarie and Equity trustees for their role in the collapsed Shield and First Guardian managed investment schemes, and a decision will be made as soon as next month. We have investigations underway and expecting to see the outcome of some of that work, she said. Mr. Sanchez says she was shocked. Mr. Sanchez says he was shocked by the complex web of financial ties. People just got sucked into the First Guardian Fund and the Shield Master Fund, Mr. Sanchez says. They got sucked in, all right. Someone was selling it to them and got them to change their mind and say, put it with me. You're going to get... They dangled the carrot. You're going to have $1 million in retirement. He has lodged a complaint with the Australian Financial Complaints Authority, but fears neither AFCA or ASIC will be able to get his money back. Too right, mate. We're not talking about a business collapsing here. We're talking about a superannuation fund, he says. They're saying we need to figure out who is owed and what. Well, I think the people who have lost their retirement money are owed their money first. Yeah, well, there's a bit more about that in a second. Sorry for this long-winded one, guys, but it's worth reading the whole thing. A double whammy. These concerns are echoed by other super fund members who spoke to ABC News. Greg McLaren is a small business owner who imports and distributes European beer, wine and spirits and has 400 customers around the country. He stands to lose thousands of dollars, but it's not only his super money that's at stake, it's his business too. Why is that? He says he was approached by about 4 years ago with a broker saying he could get a better return for his super. You don't say. He'd been put in touch with advisors connected with First Guardian. His first inkling was something wrong was when he received an email from his life insurance company. The life insurance company that I have a policy with sent me an email to say that the payment had failed to go through, he says. Soon after, he got word from ASIC that his super assets had been frozen. First Guardian's collapse also impacted one of his best customers, which was a subsidiary of Fox Friday, a Tasmanian brewery with venues in Hobart, Melbourne and Perth. Fox Friday went into voluntary administration in mid-April and left Mr. McLaren on the hook for a large amount of unpaid invoices. Not only have I lost my super, but I've also taken a huge loss on my small business. It's a double whammy, he says. Looks like a financial collapse to me, guys. I've got to keep reading. The brewery's financial difficulty stemmed in part from delays in funding from Falcon Capital, which was a key investor. After administrations were appointed, Mountain Culture acquired the brewery's assets. According to ASIC's court documents, Mr. Anderson signed off on a $31 million loan to Fox Friday. Oh my God. Mr. Anderson was also a director and shareholder of Scott Pickett's hospitality group, Rogue Traders. Isn't that amazing, eh? It's always in the name there. Rogue Traders. When he approved a $12 million loan to the company, which includes award-winning Melbourne restaurants, Chancery Lane, Long Grain, my eyes are going a bit here, Estelle, Matilda, Smith Street Bistrot, Audrey's and Como Lane. A report to the federal court in April acknowledged the group did not generate sufficient earnings to meet their debt obligations. Bloody hell. And would not be able to continue trading without urgent funding. Despite being a director of both companies, Mr. Anderson told the court the ventures were not personally related to him and he had never transacted on any of these accounts and did not consider he controls them in any real sense. Mr. McLaren says the way all these players operated was so convoluted and opaque that it could take a real expert to unpick some of the details. It just means basically I will have worked a year for nothing, pretty much. People don't seem to realise this can happen to your super. Your super can go. It can just disappear. That's right, mate. Whatever checks and balances are put in place at the moment by regulators and government bodies are not fit for purpose. They don't work because if they did, we wouldn't be in this situation. Call for federal government to step in. I might have a bit to say now. Mr. McLaren says the government needed to step in and protect the people who invested their super, but that nobody wants to take responsibility or accountability. Everyone is running for the hills, trying to cover their backsides. It's absolutely just shameful, he says. If you're going to not only encouraged but mandated to put your money into your super, it should be protected. That's the bit where they're calling for more government. The government created the problem by making it mandatory. There should be no regulation and no regulator around superannuation whatsoever, because when you get this unending flood of money that's got to go somewhere, someone's going to do the wrong thing. So who cares? They're going to invest in shit and go, well, it doesn't matter. They're going to pay another lot next week. There's millions flowing in every week from the one-touch payroll. Every employer that poor ass employer that pays that bloody super. Now, I'm not saying don't have super, but super is just savings. There shouldn't be any oh, you can't get it till this or then. This just rubbish. People need to be financially educated. And if they don't want to invest in a company that they don't know enough about or whatever, don't do it. Bury it in the backyard. Do whatever you want. It is personal responsibility. It takes away personal responsibility and it creates a massive flood of money every week, every year, every decade that just disappears into thin air into this financial system with these guys controlling it that can basically have the license to do this sort of shenanigans. Like it's not like it's, everyone's going to be a crook because of it, but it opens the door because it's just a huge flood of money that doesn't stop. So some of it's going to go in the wrong places, some of it's going to be mismanaged. And to ask the government to step in after it was their stepping in that caused the problem and took away the individual responsibility of people. All the government had to do back in 1986 or whenever they bought in, I remember the 3%, we used to get 3%, and now it's up to, 10, 12, 15 for some people, whatever it is. When they took away that, made it mandatory and took away the individual responsibility, then, that was the problem. What they should have said was, all right, by the year 2025, after that, we're not going to pay the pension. If you get to 67 or 65, whatever it is, we're not going to pay it. So you want to think about, looking after yourself and saving for your retirement. That's exactly what should have happened. You're on your own. Make sure you look after yourself because there's no safety net. Other countries don't have this welfare system that creates the rorts. People know they're going to have to look after their parents when they're too old to work. Parents that are good enough to save know they have to save for when they can't work so much. It'll take 20 years to undo it and fix it, but it's not. They're calling for the government to step in and fix it. So what happens then? I'll read on, and there's a little bit more from ASIC that's probably worth talking about. If you're going to be not only encouraged but mandated to put your money, it should be protected. Christian Eriksen planned to retire this year, but said he would have to now keep working as a house painter or sell his home in Tweed Heads. Well, at least he's got a home in Tweed Heads to sell. But this is it. This is like just, in 2008 when all the super disappeared and the people just about to retire. I'm going to retire next week. Oh, no, you're bloody not. The 59-year-old tradie had all of his $140,000 in retirement savings invested in First Guardian through another superannuation platform, NetWealth. In an affidavit submitted to the federal court, NetWealth said it had $127 million of its customers' superannuation invested in First Guardian. Mr. Eriksen says NetWealth was still charging him hundreds of dollars in monthly management fees until April this year. He was heartbroken to find out from customers and liquidators that investors are classified as unit holders and not as creditors, meaning that they're at the back of the queue and unlikely to recover any of their super savings. Even if you know that, you can't do anything about it because they're taking it off they're making the employer pay it on a monthly basis. To find out that you're just going to be at the back of the queue when you should be the first one to be paid if anything goes wrong. Never at any time did I think my superannuation would be treated like a building company and be able to be wound up with no recourse, Mr. Eriksen said. We stand to lose it all through no fault of our own. And that's right, mate. Pretty much that's right, eh? Mr. Eriksen blames government regulators and says there should be greater scrutiny of superannuation platforms and managed investment schemes. No, mate. No, you can't do it. You'll end up with one big government super scheme that you can't trust. That'll cause more corruption. That just really makes me angry that someone wasn't doing their job to allow this to happen for so long, he said. As far as I was aware, every entity in that superannuation platform was a government-regulated superannuation fund, and he thinks that's good. That's the bloody crux of the problem, buddy. Sorry about that. And here's a question. Could the corporate watchdog have acted sooner? Mr. Sanchez wishes the regulator had acted sooner, saying there is a failure on ASIC's part. Definitely. There are connections with marketing companies, cafes like this, and thing runs so deep it's cancerous, he says. I always grew up thinking super was the most protected industry in the country. To get your superannuation licence was such a rigorous process. ASIC's Sarah Court says the regulator had acted on the information available to us as quickly and with force. She says ASIC had made 43 court appearances across these matters to date. We are in almost every week, it seems, on one or other of the matters. We've got upwards of 40 investigators working across these matters. She adds that ASIC jumped in much earlier than we might have in the past, but that it doesn't become aware of these issues until the investors start reporting it or when things start going wrong. Now, this is the point. ASIC's not sitting there monitoring everything all the time. They're not walking into everyone's office saying, can we have a quick look at your books, mate? Yeah, just want to see where the money's going. They're not doing that. They have to sit there and wait for someone to complain and then go and investigate and then find out what happened. Just like when there's a murder. They're not walking the streets going, well, let's try and stop a murder today. No. The police, that's what they do. They clean up the mess after the crime. They don't prevent the crime. Not in this day and age. I have enormous empathy for these investors, and it's one of the reasons that we've put all of our resources into these matters, and I understand their frustration and their sense that the system let them down, Mrs. Court says. Her message to others looking to reinvest their super was not to buckle to high-pressure sales tactics, and she's right. The message that we just want to get out to consumers is don't be rushed into a big decision like this, reinvesting your super, in the course of a call. That's right. That's exactly right. Mr. Sanchez has a final message for those that convinced him and thousands of other Australians to part with their retirement savings. You're ruining people's lives. You're taking their retirement money. No, you gave it over to a slick salesman, mate. They didn't take it. They convinced you, but they didn't take it. You were stupid enough to give it to these arseholes. He says that while he may be able to rebuild his super eventually, losing that much money derails life plans, and yes, it does. I have to start again with my super at 41 years of age. I have a partner, she's got an 8-year-old son, and we want to move out together in the next sort of year or so and build a life. How can I do that? Not knowing what my security is, he explains. Right now it feels like me and 6,000 other people have just completely fallen through the cracks. And that's the end of the article. And I think I've said enough there, guys, Do some reading, financially educate yourself and realise that this whole scheme is open to this shit. People are going to do this. They're drowning in the money. They're being taken off the employer. The solution to the problem, totally remove the mandatory super payments. Tell people in 20 years' time when you retire, there's nothing from the government because that's from the people. That's from your neighbour. That's from the taxpayer. And the government's borrowing the money anyway, so you don't want to rely on them, whoever they are. Look after yourself, rely on it yourself. Don't expect that you're even going to get a pension. And that was sort of sold to us in 1983 or 5 or 6 or whenever it was. I remember when the 3% started. Yeah, there's the pension won't be there when you get to 67. Well, 30 years on, 40 years on, it's still there. It doesn't buy much. You don't want to retire at 67 with no savings and rely on the government pension. You're going to be living pretty poor. But remove the compulsion. Go back to voluntary, and just tell people, look after yourself, and you'll get rid of thousands and thousands and thousands of unproductive public servants that do nothing but meddle in the economy. So yeah, it's sad, and we're going to see more of it. We're well on the way to the financial collapse, and it's just like the building. The 3,000 building companies that went arse up last year. Now it's a super funds, it's debt and bad management, and a fiat currency that's not backed by gold or silver. This 677,000 this guy's looking forward to. That might buy a bloody small car by the time he gets there. Inflation will get it anyway. So if that's in dollars. But look out for the shysters, eh? Have a good one, guys. See you on the next one.